What is good, guys? It's Ray J back with another video. And so I'm going to break down what's going on with Tesla stock and how Tesla may be impacted by the NASDAQ 100 rebalancing that's coming up in the next couple of days. I'm going to break down why this is actually not as crazy as what some people are thinking, how it's going to actually work, and what you should be watching for as a Tesla investor. Before I break anything down about the NASDAQ 100 and break down what this means for it, this whole rebalancing thing that's going on and what this means for Tesla, let me just mention a couple of things. I'm firstly not a financial planner, take none of this as financial advice. And don't forget about the Webull link. The offer ends very soon. Deposit any amount of money into the account and you are guaranteed up to 12 free stocks. The offer ends in just about 11 days. Check it out before they run out. With that out of the way, let's get on with the video. All right, so Tesla was down about 1.1% on Friday, a little bit more down during the after hours, and overall, it is still looking relatively weak. Now, one thing a lot of people are worried about is how on earth this whole NASDAQ 100 rebalancing is going to, take place. And I want to break that down in a very simple way. So when you invest in a fund, whether it's an ETF, an index fund, or etc., you're basically investing in something that has its money divided between different companies based off their construction methodology. And what does this mean? Most of the time, these companies are not necessarily equally weighted. This has to do with their market caps and other factors that dictate how much weight they have on affecting every single one of these funds, these ETFs and index funds, etc. So this is important because the NASDAQ 100 specifically is market cap weighted, which means the money that you invest in it is divided based on the market cap of the companies within it. The larger the company is, so imagine those big companies like Microsoft, like Nvda, like Apple, the larger they are, the more of your investment it receives, right? The more it receives, which means that it's also going to have a bigger effect on how this fund ends up moving, right? So this means that they're going to receive a bigger effect, a bigger fraction of the entire fund, and they're going to affect it a lot more. So there's nothing wrong with doing it in this way, but basically, what this means is the NASDAQ 100, for it, the large gains for a handful of just a few companies have a bigger effect on it. That means the top five companies, the biggest tech companies, think about them. You have Microsoft, Apple, Nvidia, Amazon, Meta, the list goes on. They account for more than 43% of the index. They have a very, very big effect on how the NASDAQ 100 moves. And then we also have like Tesla and Alphabet, aka Google. They affect this thing big time. So even with them, with Tesla and Alphabet being included, that's 55% of the index, right? That's based off its methodology. This concentration is what's leading them to want to like rebalance it. And this happens every so often, but typically we don't get major ones uh, that often. We tend to see that happen a lot more during like every couple of years. So the last time we saw these major special rebalances was like around 1998 and 2011, and this could lead to a boost in the concentration of like Starbucks and just a couple of others. So how will this affect investors? Basically, these funds are going to be a little bit less impacted by tech, but it's going to be a very minor change once I show you guys like the numbers. They're going to be a little bit less impacted by tech and a little bit more impacted by other companies, such as consumer discretionaries and just a couple of others. So I'm going to break down the weights in just a few minutes, but this is very important. What's important about this is this could lead to like different factors out there, different pieces of news like that affect consumer discretionaries or like other companies out there to have a bigger effect on it. But in my opinion, when you actually look at the numbers, it's not that significant. And I'll show you guys that in just a few minutes. So you're not going to be wanting to go all in on every single one of these. You don't want to go too crazy on just like the NASDAQ 100 anyways, but this could change the way in which it's going to be moving just a little bit. Volatility may not be as crazy when a big tech stock moves as much, but it's going to be undergoing a special rebalance. And this will bring down the weights of the top stocks. And they're not going to be adding or subtracting any of the securities that are listed. So what are the numbers looking like? We actually have a chart right here to show you. Right here, you can see Goldman Sachs. This is like their data right here, which is showing the top 25 NASDAQ 100 companies by market cap. And they actually have a chart right here that shows by how much will their weights be changed after we have the new changes, after the rebalancing. And you can see right over here, it's actually not that much. So I'm going to go right here. I'm going to try to zoom into this. So give me 1 second. Right. I think that's good. Anyways, you can see right here, we have the index weights right here. We have the NASDAQ 100, okay? So before, on July 14th, Apple would make up 12% of it. So it would have the most effect on how the NASDAQ 100 would move. After the changes, it only has an 11.5% effect. So a slight change, but it's not that crazy. But you have to remember that this is happening to a bunch of different companies. So the overall weight of tech is going to drop a little bit more than that. So for example, now Microsoft, right? This used to affect it by 12.8%, or at least that's how much the weight of it was. It's going to go down to about 9.8%, right? Alphabet, it used to have an effect, a bigger effect, 7.8%, 7.6%, excuse me, guys. Sorry about that. That would be the weight before, and then it's going to be reduced to 5.7%. So slight changes to a lot of these big tech stocks. They're reducing the weights up here, and they're going to be distributing it more down here to other companies. So then when you have like Meta, it used to have a 4.4% weight. It's going to go down to 3.7%. Nvidia, which is up here, it used to have about a 7.3%. It's going to go down to 4.3%. So that's a bigger change to Nvidia. So remember how when Nvidia would move big time, this would have an effect on the whole market, or at least the NASDAQ 100. It's not going to be as significant now. And then for Tesla, it used to have a 4.5% weight. Now it's going to be about 3.4%. So a slight change. And this is actually going to add up to something even bigger. But here's the thing about this: what's going to have a bigger effect now compared to before? Well, look at Costco. Costco used to have a 1.6% weight. Now it's going to go up to 2%. PepsiCo used to have a 1.7% weight. It's going to go up to like 2.1%. So they're redistributing and rebalancing the weights so that the bigger tech stocks are not impacting it as much. They still have a very big effect on it still, because if you add up like Apple, Microsoft plus Amazon, all these together, it's going to be well over like 30% still. So they still affect it big time, but they're not going to be as impactful. And there's going to be a little bit more power to these smaller companies to have bigger weights. So, for example, Adobe used to have 1.5% of the weight. Now it's going to go up to 1.9%. AMD, for example, used to have about a 1.2%. It's going to go up to 1.5. Netflix, what is Netflix? 1.3 going up to like 1.6. And finally, Starbucks. I saw Starbucks somewhere here. That's the smallest one. It used to be 0.8%. Now it's going to be 1%. So a slight increase overall. And you could see the overall median, the median went from 1.3% to 1.6%. So a slight increase. That's all it's basically doing. Now, is this super significant? Not necessarily. I don't consider this crazy, because even though they are reducing it a bit, tech is still going to dictate it big time. Tech is going to make a big part of the NASDAQ 100 still. So if Apple were to run like crazy, it's still going to have a big effect on it. It's just not going to be as crazy as before. Is it that significant? I wouldn't really say that. I don't think it's going to be that crazy, but it is going to have an effect, and it's at least worth noting. Now, what about for Tesla? How will this affect Tesla? I don't think that this is going to have a direct effect on Tesla, and Tesla's effect on the NASDAQ 100 will be reduced slightly. But I once again don't consider it that crazy. What's going to be more crazy for the whole market is going to be what happens with these big earnings, because these will still have a big effect on the entire market, including the NASDAQ 100. Because one thing you have to remember is that the whole market tends to move in like unison. We tend to see the market move very similarly, anyways. So, like I said before, if Apple starts tanking, for example, we could see other stocks kind of like follow in a ripple effect. It's still going to affect the NASDAQ 100, anyways. Same thing with like Microsoft and Google and even like Tesla on some occasions. So it just goes to show it's not going to be that crazy. I don't expect it to be absolutely insane, but it may slow it down just a little bit if tech moves. Tech may not impact it as much, but it will still have a big effect. Anyways, what's going to be more impactful is going to be things like earnings for next week, things like earnings, the FOMC meeting. You should be more concerned about those and less concerned about the rebalancing. The NASDAQ 100 is going to be very similar to what it was like before. I'm not expecting a super, super crazy change to it. To add on to this, don't forget we have Microsoft, Alphabet, Google, all these big earnings coming out for next week. We have Meta, Intel, Roku, the list goes on. These are going to be much more impactful for the whole market and the NASDAQ 100 as a whole, because many of these stocks will move at once. And simultaneously, especially going into next week, we have like Apple, we have Amazon coming out soon. So this is going to be on my radar a lot more. I'm more focused on this. I'm going to be more focused on the FOMC meeting. And I don't think this is going to have a massive, massive effect on the index in its entirety and the way it moves. I don't think it's going to be that crazy, but it will have somewhat of an effect. And I just wanted to note that. Okay. So I want to make this as clear as possible. these companies do affect the NASDAQ 100. Their impacts will change a bit, and please be prepared for some changes in volatility, but nothing too insane. All right. Have a great day, everyone. I want to make this video very short. I'm going to release another video a little bit later on, maybe by tomorrow, if anything, and talk more about Tesla specifically in the market. Until that time comes, thank you for listening. Have a great day. The market to the moon is the long term is still incredibly bright, and peace out.